Yeah, let's continue, I would say. I hope you have some power again. You ate something, you drank something. I will now talk about the future of ICOs a little bit before about the issues, because I think you can already tell that my analysis before of the ICO markets was kind of biased, because I just spoke about the good things about ICOs towards venture capital. But now actually I want to tell you what the issues are and what the future of the ICO markets might look like, before we then are deep diving into how to launch an ICO. So first of all, the issues. First of all, we see a lack of pre-seed funding. Since a lot of ICOs are avoiding equity investments and thinking that they can raise purely based on a white paper, they are not having a prototype. They don't have a proof of concept before they raise funds. And in 2016, actually, that still worked. A lot of startups just raised a lot of money based on a white paper. Nowadays, that's not possible anymore. So you need some kind of seed funding, and that's why I strongly believe still in the venture capital and venture capital funds, especially seed funds, in this space. Because there has to be funding for a prototype to show actually your investors that there is something, that you have some users, you have a proof of concept, you already can provide some KPIs. I think that's very, very important, especially, for example, in Switzerland, because we touched that point very briefly. I mean, if your platform is already working, then you can even issue as a utility from the beginning. I think that's a very important point. Then, of course, scams and fraud. I mean, yeah, maybe a small story about that. There was that was still in the end of 2006. No, even beginning of 2017. Yeah, you can see how quickly this market is actually evolving. There was a student in the US, and how it is in the US, I think Pat can tell you that, yeah, you automatically have actually some debts after you're studying, because studying is very, very expensive. So he just created a white paper, filled it in with incredible buzzwords like AI, robotics, machine learning, blockchain, big data, you know, all the things which are just, wow, I should definitely invest into that. ICOs were still a very new thing. He had nothing but this white paper. And yeah, he at least raised $450,000 and he had no more debts. Yeah, and then he just ran away. That was still possible.
He used that to pay for his college
Yeah.
tuition. Yeah, he was like 19 years old.
Yeah. Yeah, and this is what was still possible. I mean, nowadays you're not seeing this like that anymore. I think it's even not possible. But you see things like SafeDroid, yeah, where people just, for example, fake or pretend being a scam, which might be funny for some people, which is not funny for most of the people. And yeah, where you are really losing money just because someone thought he's making a great joke. Or something like Envion, where, for example, the smart contract was not proper audited. That's another issue. Then the legal framework. A lot of ICOs are just struggling at the moment. What jurisdictions do I go to? What do I do with a utility token, with a security token? But it also affects you as an investor at the end of the day. Because, for example, if it is a security and they just work on the assumption it's a utility and they list it on an exchange, and then, I don't know, BaFin or SEC or whatever rules it's a security, then they have to get delisted. You have no more liquidity for your token you're invested in. Or if it gets shut down because they chose a jurisdiction where, I don't know, the government can just decide the other day to shut a business down, then, yeah, everything is gone what you invested in. So always make sure that you really make due diligence on the projects, and the legal framework in this case is very, very important. Then unaudited token contracts. I think, yeah, I already touched the point, for example, with Envion. What we are, for example, doing at Iconiqlab, just to give you an idea of how auditing today should look like. Where should I begin? Smart contracts on Ethereum are based on Solidity. Solidity is the programming language behind Ethereum. Not a lot of people know that. It's not comparable to Java or to C+ or something around those lines. It's still quite niche. So the problem is now that you don't have a big pool of talents that you can choose from to do an audit. Now PwC, Deloitte, all of them are entering that space, but I highly doubt, or even I know, that they don't have the most knowledgeable people for an audit there, for a smart contract. But we are working together with Solidified. Solidified is actually a token platform where all the Solidity coders can register. Then they can attack a smart contract. The better they are in coding, the longer they have been out there. It's a little bit comparable to Steam Power. The more tokens they receive for attacking a contract. And only if the contract defends all the attacks from all the coders all around the globe, which are all Solidity coders, then you get a certificate that this contract is audited. And just to give you an pardon? Thousands of Solidity coders.
So there's about 20,000 estimated Solidity coders in the world today, of which I think 1,500 have already registered on Solidity.
Yeah.
But when you get that status,
The status? There's a certain. Oh, yeah.
Yeah, so to become a member of the Solidified framework, you have to actually go through a test run.
Okay.
So they have to go through an audit of a contract and be able to assess that it is actually a contract that is either provable or there are errors in it and identify what the bugs are. If they pass through this test, they get a certain status on Solidified and are granted a bounty of a certain level of tokens. Using those tokens, they can stake on a platform if the contract is incorrect or if it is approvable. And basically, they are paid off a bonus in Ethereum bounty from the provider of the contract onto the network. And if they identify critical problems, they receive a higher level of bounty because it's a major issue associated with the platform. If it's a minor error, it might only be something along like 1 ether that's been paid out in a bounty for that program.
how many stakes do you then need to be then certified as
So
solid?
this is a truly kind of proof of work concept that it is entirely based around game theory, basically the underlying coding of the blockchain itself, that the auditors themselves are at odds against one another to identify the issues with the contract layer. Basically, those that identify the layer and prove that there are inconsistencies of what is seen by the community as correct, they get paid out in that bounty based on the stake that they provide to that contract. Those that are incorrect and are completely oblivious to the movements of the other players will not be paid out that bounty and lose the staking that they put on the program.
But when does then the one token or ICO then receive the status approved?
There's no more critical issue. Yeah. So
How many people have to have checked it, or how many stakes have been claimed? 1,500 or 1,000?
theoretically, hundreds of individuals would have had the opportunity to review it, but it's only within an allotted time period. So they have to make sure it's reviewed within, I think it's a 3-day period. Over that 3-day period, individuals will provide issues that they note within the contract and then stake their tokens behind those issues. The author of the contract, which is usually a coder off the external side, then has the ability to determine exactly, well, either make corrections or rather go back and say, actually, I disagree. This shouldn't be a change that is made. If the issuer of the report disagrees and says, actually, no, this is a very critical issue, we have to push this further, it goes into arbitration. And when it goes into arbitration, this is where the mechanics of the game theory come into play. That you then have the opportunity to come to consensus behind either the author or the individual who has identified the issues.
No.
Once again, going to when do I achieve the approved status that this is?
Once it goes through this whole ecosystem,
Yeah.
based on, so if the author makes the changes and the community agrees this is a perfectly fine contract, then Solidified issues a audit report, pretty much exactly like a PwC. It's either qualified or unqualified, exactly. If there is...
So that's like the PwC or an audit that you
Exactly.
go through.
Exactly. If the author rejects the changes and the arbitrator rules against the author, then Solidified issues a qualified report saying we've identified these critical
Yes,
errors,
yeah.
and then post it on GitHub. Exactly. And then that is frankly going to kill your ICO because nobody's going to want to invest in audit critical errors.
And just to provide you with one story very quick, is because I think examples are always very helpful in this case. We know one ICO, I can't disclose the coder or the ICO, but that had a phenomenal coder who did some of the biggest ICOs you know for their smart contract. And it was audited even by a third party. I think it was a crypto auditor and there were no issues. And then we recommended, we had some contact with them and we recommended them to use Solidified just as a test. And then there were still 3 critical errors detected. And this is the power of the crowd, especially in a niche programming language like this. Yeah.
What is the cost of this process?
Patrick,
So
know
the cost of the process, traditionally, the company itself will issue a bounty of between 7 to 10 ether. So right now those prices would be, what is ether down to right now?
400 euro.
400, okay, so that would be about 4,000 euros of a bounty that will be paid. The individuals that identify the errors in the contract, if it is a minor error, they might get paid the 1 ether, just in it's fixed. If it's a major error, then it goes up to 7 ether, and then effectively the whole amount gets paid out. So those individuals capture it. And what Solidified captures is a 10% transaction fee on top of the facilitation of that bounty transaction. So they have thousands of contracts that are being submitted to them. So actually, it's a pretty monetizable business. They're actually a partner of ours, in addition to one of our portfolio companies. Really excited to be working with them.
And
This is only on the technical level, right?
yeah.
They don't check functionality.
Yeah.
No, they do. So they make sure that the functionality as described in the specs is coded within the language.
What about confidentiality within the smart contract? If it's actually solidified by...
So, and this is where it's a problem. One of the biggest issues right now in the space is that it's very much frowned upon for there to be any confidentiality. Of course, that's why nobody wants KYC in the space, in addition to IP protection. So the smart contracts themselves, it is best practice in the space to post your entire source code onto GitHub. So anybody in the community can see it, anybody can take a look at it, anybody can review it. Because there's really nothing proprietary for something that ends up on a public blockchain. Because at the end of the day, that confidentiality is out the window as soon as you post to the mainnet on Ethereum. That's what most people do their ICOs in, and anybody can review the contract language. So it's best practice to provide that coding up front, even if it is something that you might want to have protected by IP. But it's just not necessarily, it's very much frowned upon in the space for the time being.
So because there would be some confidential information in the smart contract, I would suppose.
Not
Well, not in an ICO contract.
Yeah.
So there's this is a completely different monster. So on a privatized blockchain.
So you're just talking about ICOs?
Yeah, this
Yeah,
is purely about
only
ICOs.
only the crowd sale contract.
Oh,
Yeah.
okay, so not
Yeah.
about utilization,
Yeah.
about...
No. So if you have a contract on a privatized or permissioned network, then yes,
Okay.
IP protection comes into play, anonymity between the parties, the counterbalances, the counterparties, everything that is completely anonymous and confidential.
Okay.
Depending on how you permission the blockchain access. So for instance, Ripple is a good example of this. Ripple has the private area, but it also has a public angle of the chain itself. So Ripple can be split and forth that there are private chains that we instituted at the financial institutional level that allows for those smart contracts to only be known of between the counterparties, right? But then you have Ethereum, where as soon as something goes on mainnet, everybody in the world can see it. They won't understand it, but it's there.
And the next point is over liquidated projects. I think that's something we don't have to tell you. Yeah, that some ICOs just raised a ridiculous amount of money, because the approach they are taking is not how much money do I really need. It's the approach of how much money can I raise, and that's a big issue. That's why we are also always working very, very close with our startups, for example, to really determine an amount that's reasonable to sustain the business long term. Then lack of transparency. I think it's a big issue, or it was a big issue, that you just throw your money into an ICO and then you hope for the best, but you have no idea what it is spent for. And I think the question came up in the very beginning, actually, how to, from whom was it? How to combine actually, or how to track ICOs afterwards, what the money is used for and so on. I don't know who it was. But anyways, for example, how we are doing it, I mean, we get an exact report, like on what day, with a timestamp, what amount of ether was spent to what address. We have to tell our our accountants in the crypto space what to whom the address belongs to. And then actually this gets totally integrated into our off-chain, so into our normal accounting. And then you will see it in the profit and loss statement and on our accounts. And so it's 100% transparent. And furthermore, there's also the project transparency by Sentiment, where we are a part of. So project transparency was launched by Sentiment, and it actually, every funds you raise in ICO, or if the amount you spend is bigger than 1% of what you have raised in the ICO, you have to tell the public what it was being spent for. this was like the beginning of bringing some transparency into that space, but we go even further. So for us, even every single microtransaction of some cents is definitely tracked, and you would always know what we are spending the ICO money for. And this is the same what we suggest our startups, so it's 100% transparent.
Yeah, and basically, as you know, my background is at PwC. I was an auditor for many, many years. Financial reporting at the end of the day is still very near and dear to my heart. I'm very much an accounting nerd. So it was very important for me from the very beginning to bring the same level of accountability and reasonable financial management for funds that are raised in an ICO to the space. So we actually have balance sheets, income statements that we issue on an ongoing basis, and it's all done through our partners at Bio, who have created an algorithmic tracking of transactions on-chain to assign buckets to the different types of transactions. Basically, we can identify what keys we at Iconiqlab partnered with for all of our Ether transactions, assign that to marketing, assign it to events, assign it to advisory services that are paid out, and then that classifies it into the statements that Bio has put together. Now, right now it's not audited, just because nobody's coming into this space, and PwC and LM, they're building up their roadmap for this. But it's still a level of transparency that nobody in the space is offering. And this is where I really want to push the institution, because there needs to be that same level of quality assurances provided to investors that we see in the traditional financial markets, and we're really trying to help drive that change.
And what's that partner you mentioned? Bio?
Bio, B-A-Y-O. It's an Israeli-based startup.
B-A-Y-O?
Yeah.
Bio, I think it's .io, or is it?
Everything is .io.
Yeah.
No, I think it's .io. Yeah.
Yeah.
But could also be .com. Yeah.
Yeah, they're starting to do a lot of good for themselves. They're gaining a lot of traction. Really, really good company.
Yeah. So yeah, in general, if you're interested in the projects we have mentioned today, so Bio is this accounting thing, then Unibright was the thing in the ERP environment, and Solidified is the coding smart contract auditing tool. So what might the future of ICOs look like? I mean, there could be so much more on the slide actually, but here are what we think at Iconiqlab are the most important points. So first of all, as I mentioned before, there will be more security launches. I think the markets are screaming for it, especially professional investors, banks, venture capital funds, family offices, and so on are screaming for security launches, because then they have a way to really calculate the value with a dividend or with a buyback clause or whatever was mentioned before. Secondly, we will see much, much, much more professional exchanges. That's also a topic we touched before. So at the moment, even if you look at the best crypto exchanges, it's not comparable to what we are seeing in the traditional financial world, where you need to have 99.9999999% availability, where within seconds you can do millions of transactions, where you have really, really efficient order books, where you have market making activities and so on. So the really professional exchanges will enter this market and will support definitely security tokens. And I think this will be also a very, very great step into the right direction. When it comes to KYC and AML on the secondary market. Because, for example, we do our KYC AML on the primary market very well in the ICO. But then there's a secondary market where it's out of our control. Because if today Bitfeed or HitBTC would decide to list us, they don't have the same KYC and AML procedure as we have, so we wouldn't have control about it anymore. We would have to tell them, please delist us, or do the same KYC AML as we are requiring.
Are you doing that, or?
We are not listed on HitBTC.
Okay, but
Yeah.
in general.
In general, we would, absolutely, yeah. That's why we are launching with the one exchange we want to launch.
But it's the unfortunate nature of this. If you can be delisted from BTC, you can request to be delisted from Binance, from Kraken. You can't ask to be delisted from BTC markets. So no matter what we can do, there's nothing you can do in a smart contract or code or whatever unless you block all tokens and can keep the trading on IDEX or EtherDelta free, right? So there's always going to be this added layer of money laundering potentially built into any token issuance, just because those decentralized exchanges, hopefully they're going to get shut down in the near future. I don't think it's going It's patience, less regulated patience.
Then the third point, clear regulation. I mean, it's something you can read everywhere, but I can really say from my experience, I've been in the European Parliament to discuss about that stuff, in the German Parliament to discuss about it, in the Italian Parliament, surprisingly, also. And I can really say the guidelines are coming. Everyone is actually in Europe, especially, let's take a country for Italy, for example, where banking really is not on the best path. Yeah, let's phrase it like this. Of course, they are very, very open to new methods. In Germany, we always had a very, very big talent to totally avoid everything what is innovation, and I think this now becomes aware to the regulator, and I think we are seeing a very, very open-minded regulator. It might sound surprising to you, but also at BaFin, they are very open-minded. They have a huge task force to deal with this kind of things, and we will see a European framework very, very soon, especially for the security lounges, and I'm very optimistic that this will also professionalize. And this all will lead, I think, to more high-quality ICOs, because only paper-based utility tokens with, I don't know, two people where one studied tech and the other one, I don't know, bought some cryptos 5 years ago, and this won't work anymore. You need the same things as you need in the VC space. You need a good team, a good track record, USPs, you need track record. Patrick will come to all that later when he says how to launch an ICO. So we will see more high quality ICOs in the future. At the moment, you definitely need someone like us, even more than in the future, because we are filtering all the scams out. Then a higher level of transparency. I touched that before, and in the future, this accounting, what I just mentioned, will be the standard for all over the world. There's no workaround to that, because you have to be compliant with your laws. In Germany, you have to be compliant with HGB, internationally IFRS or US GAAP if you're in the US, and there's no way not to be compliant with it. And token sales and VCs, because it's a very, very common, I think the most talks or the most events where I was invited, it was always about VCs or token sales, which in my opinion is a stupid question, because it will go hand in hand, definitely. Because this VC always provides you smart money. It provides you a network. It provides you very, very knowledgeable people. In the beginning, they can invest that you can actually build a product, you can build a platform. And that's a very, very important thing. So, and on the other hand, if you, from a VC's perspective, if you do your next financing round via an ICO, it's a very good thing because you get non-dilutive capital. That's also a very good thing. So I think those two fundraising mechanisms will go hand in hand, and that leads to the J-curve I showed to you in the beginning, where you have the entrepreneur, then the seed investor, and then the ICO, long term. So I would argue it would be somewhere between seed investment and Series A, Series B. There are other people in Germany who say that in the future it will be somewhere between Series B, C, and an IPO. I believe in the more startup-like environment, but you could make an argument for both. Yeah, any questions to those things we just covered here? Otherwise, Patrick would,
So your business model will be, like your function will be like a VC to the startups in your incubator, and then the investors will be actually just participating in token sales with discount.
Yes.
So that's your combination.
Exactly.
And you also take shares from the startups that you incubated?
No, only tokens.
Also only tokens?
Only tokens.
Okay.
No equity.
Yeah, we capture only tokens. So actually, the way that our business model is set up, we actually don't invest into the tokens themselves. Because if you invest into the underlying alternative derivative investors, you're effectively investing in it, right? You would obviously get a license for this. We provide grants to each of our companies. Pretty much just no questions asked cash, and as long as it based on certain stipulations in the contract, the cash comes freely to each of those companies as long as it's used for certain things related to the ICO. Now, we provide then services to these companies, which is exactly what Max said, listed up there earlier, related to development of token economics, a healthy integration of blockchain layer, soliciting to potential investors. Now we have to remain fully objective in our solicitations. We can't say this is a really great company, it's going to make you a lot of money, go invest in it. We have to provide objective due diligence information so as to remain at kind of at arm's length, or else we'd be an investment advisor, another thing that would be triggering a license requirement. And in doing so, we are able to investor on the back end based on how much financing we provided the company and how successful their ICO was, a portion of their tokens. And usually it ranges between 2 to 9%, entirely based on how much financing we have to pay the company. Because if we do a company that we have to give 500K to do a 10 million ICO, well, we have to capture pretty much 8 or 9% of their token for us to monetize our own selves. But if it's a company that is actually relatively liquid, has gone through a few venture financing rounds, and we're just working more on a consulting basis with them, we'll only capture maybe 1 or 2% of their overall token sale because it's less of a fixed cost for us, less financial risk. And depending on where they are in the game, we're willing to take an additional layer of risk for less monetizable value on that back end.
Okay. But the money you invest is only going to be used in ICO launching, not product development.
Yeah, so it's actually why a lot of the startups that we work with, they are not, frankly, early stage startups. A lot of them are actually in their growth stage. And this is where long-term, I see ICOs becoming a use case. So people that you talk to that come from a traditional financial background, they look at this in one of two ways. One, this will be a replacement of an IPO. But that's for late stage companies, right? Those are the ones that are actually ready to go on the marketplace. None of these companies are. I look at an ICO as an actual use case for early stage financing, kind of carving out a niche for itself as a displacement for a Series A round. So we work with companies that have done angel investments, seed, post-seed rounds, and really the Iconiqlab financing is nothing but a bridge financing round that allows them to cover that legal and marketing expenses to get them prepared for the pre-sale. Not even for the full mass public sale, but rather just the pre-sale to the Iconiqlab members. Because we can actually severely limit the marketing expenses for all of the companies as a part of our program because we've created a targeted group of investors that we know exactly who they are and how to reach them. And we do that cost-free, effectively. And this allows that company to then get that larger financing round to then have that max scale global ICO for that public sale. And this is where I believe it carves out that niche as that Series A round, because effectively what you've done is created nothing more than good user engagement on a platform through an ICO, which is nothing different than what they value Silicon Valley companies as from a KPI perspective. There isn't a single Silicon Valley VC that uses multiples or DCF anymore. It's entirely user-based KPIs. So you've now created through a Series A financing round, a non-dilutive Series A financing round, a mass set of KPIs for future valuations of that company, and you're incentivizing users to engage with your platform through monetizable value that they'll be able to have on that back end. And this creates an opportunity for that company to have that non-dilutive financing at a Series A to then truly do a Series B, Series C, and then maybe do an IPO in the future over that long term. And this is where I see the ICO market going, especially in relation to security tokens, because that will create a special preferred A, preferred B, whatever asset class on the balance sheet, and then allow for the company to grow and scale from there, truly liquidating the value of the shareholding to the community itself and allowing that community to be the value driver of the overall entity.
Pat, you can already come here.
Oh, actually, you're going to take this one. I got emails I got to get out. Oh, beautiful.
Hey. Good to be back again. So how to ICO? So first of all, what I want to talk about, because I really deep dive into the different factors which really do matter. One of the first questions you should actually ask yourself before you start an ICO is, what industry am I in? I mean, this is not a complete list, but and does it have the potential to actually be disrupted through the use of blockchain? Because at the moment, as I said before, the blockchain layer is still something necessary in 90% of the cases to actually launch an ICO. And that are just some of the industries that will get disrupted or are already been disrupted through blockchain. Let's take the real estate space. I mean, it's very funny. If I buy a house in Miami today, I have so many intermediaries. So first of all, there's the guy who sells me the property. Then there's someone who owns the property. Then there is a registry there where I have to register that I'm the new user, the new owner. Then there is a notary who will actually notarize it. There will be an attorney advising me on how to do it. There will be a bank who will finance the whole thing. and many more things. We are talking about 8 to 9 or 10 intermediaries in the whole ecosystem. And through blockchain, I could really just go and they could say, okay, these are the parameters of the house, this is how it looks like, and here we can do the whole transaction here, and it will be notary approved through this private blockchain layer. For example, this is how the future looks like. Won't happen in the next 5 years because we have a strong lobby of notaries, for example, and of attorneys, of course, but this is how the future will look like, in my opinion. Or even fundraising. Why do you have to do an AIF, or why do you have to do another kind of vehicle? You can just fundraise by a token, via an ICO, for example. Utilities, I think, a great use case to actually determine when do you want to sell your energy that you're producing with your solar panel. You can just determine that via a smart contract. As soon as the price goes to this level, I will sell. I will be incentivized with tokens, for example, from my utilities provider if I sell it at a time where the market price is quite low, and all kind of that stuff. I think another very, very interesting example for disruption is Western Union. I mean, today's I find it a little bit disappointing or already sad that people go from poor countries to rich countries to work there, then send the money back, and then they put in $1,200 here into Schalter. Yeah, to the cashier, and then on the other side of the world, in the other country, $1,000 come out, just because there was an intermediary. I find that very irresponsible. But now with blockchain technology, or through crypto especially, a lot of people are already, if you go to Africa, for example, you have a lot of cities or small villages where one in the village has a wallet and access to make actually crypto to fiat money. And you can just send it back home with maybe 12 cents transaction costs. He maybe charges 1% transaction costs, and then you can send the money back. So Western Union and MoneyGram are already getting disrupted. You can see humanitarian aspects, for example. If you have a foundation, that you can really see where does my money really go. You can track it on the blockchain. Is it really used for what is being promised? Insurances in the future, it will be very, very difficult at the moment from a regulatory point of view, but in the future you could do peer-to-peer insurances. The crowd can just insure to someone else. I mean, if I go, for example, I have a friend in Nigeria and he just tell me what an insurance costs there. Yeah, it's incredible. Or what a loan costs there. It's irresponsible. But I, as a person, could say, okay, this guy, well educated, has his own business, I trust him, he gave me this and this promise, I will do an insurance for him. I will cover that. And this is where the future in insurance, in my opinion, will also go to. And that are just a few examples. So coming back to the main question is, you should really ask yourself, is this an industry where the blockchain really makes sense? Does it provide transparency? Does a certain token make sense? And different questions around those lines. And just to give you an idea, I don't want to deep dive that much today into it, but this is, for example, our due diligence process. This is how we are evaluating our startups. You can see it's quite a common or best practice out of the venture capital space, combined with some blockchain and token relevant information. So the due diligence is very in-depth, and if you are planning to do an ICO, I would look at this slide and see, okay, am I checking all the boxes, actually? Or at least most of them, yeah?
What's the time frame? I mean, if the company comes to you and
Really on a case-by-case basis, but 4 to 8 weeks.
Okay.
Yeah.
So some of the earlier companies, when they come to us, we do a more thorough check, just to really more dive into the team itself, make sure that they have the competencies and talk to people that they've worked with in the past, do some background checks, make sure that they kind of check out, that they can deliver on the platform that they're looking to develop. Some of the later stage companies, more specifically spin-outs of large corporates that are becoming white label solutions for the blockchain that they're going to be integrated in the later stage, obviously a little bit of less due diligence that needs to be going into this because you already know it's established professionals, they're already financed, they already have the platform built, they've delivered and executed. It's kind of the same as you would see in the traditional space anyway.
Yeah.
It's hard to read, so...
Yeah, I will provide the shares later. I will provide the shares after the event, definitely.
So it's not possible to read it now?
Not share. Shares is good too.
should I read now every word?
No.
I
I
don't know.
just asked if this is available now, not later.
Pardon?
Because I wanted to ask if these sheets are available now, that I can see it here. So that's
Now.
So if you go to the website, you wouldn't be able to download
Yeah,
this.
actually on our website, there is even this slide, I think, on our website.
On the color paper, yeah, it actually might be.
Yeah.
page 21.
I just opened it.
Okay. So this is, but anyways, we're not talking too much about this specific slide today because I want to touch on the most important topics from a startup's point of view before you launch an ICO. I mean, there are certain things that doesn't change from the venture capital or the general startup space. So first of all, your business model. That's all that counts, your team and your business model. Business model, you ask, of course, about the market. What is the size of the market? What is the growth especially? And what are the margins? So something that people often don't consider are really the margins within the industry. I don't know if you know that there was one startup, for example, in the UK. They didn't even look like what they want to do or what fancy idea they have. They just looked what industry does actually provide the biggest margins, and then they just went into it. It was mattresses, by the way. And then they went into it and were very, very successful. So margins does really play a role, because if you have high margins, then there's a lot of space also to really disrupt the industry and be price leading or be whatever.
The other thing that I would say here is you have to evaluate if your business model actually has a need or use case for the blockchain, as well as a need or use case for a token. So you can have a tokenized business model that doesn't necessarily need a layer of blockchain. And we're a perfect example of this. You also can do a blockchain integration that you don't necessarily need a token for. And other companies might not have really a need for any of this, and really should not even consider doing an ICO unless they're planning on doing this as a pure security solicitation. So you really need to look at the business model, look at what ways you're able to drive value to your community and drive value to your stakeholders, and assess if this is something that's worthwhile to be doing that ICO for.
Yeah, and as Patrick perfectly mentioned, a value proposition you have to think about. And of course the scaling potential, because you want to grow. Is it really a business that can grow or not? And of course the team. I think the team is the most important thing. You could talk about team-specific things with Patrick for hours, because at the end of the day, even if, let's assume a really good team has a shitty idea, they could still pivot. They could still change, yeah? And a great team will always execute, and they will always find their way to actually make it realistic and monetizable. And of course, competitor analysis and USPs. You have really to define, especially in the blockchain space, really think about, does the blockchain make sense? Am I creating a USP through that? And what are my competitors doing in that space? Does it make sense to still enter? Then of course the token model. I mean, we discussed a lot about tokens already, but does it actually fit the business model? Especially, that's a question for the utility tokens. If you find a great utility token for your business model, sure, go ahead, do it. But a lot of times that will be a security token in the future, and then it's more about, yeah, the financial instruments we already know. And depending on what you're choosing, of course, that influences your expenditures and the timeline a lot. I mean, if you have to issue a prospectus, we know that's quite painful. It will probably take you at least half a year. If it's a utility and you are very, very clear it's utility, you can maybe do that in 2 to 3 months. We always suggest our startups, in any case, doesn't matter what token you're issuing, at least take your 8 to 9 months until you do the ICO. Because otherwise you won't be legally compliant, you won't have enough time to get traction, and you won't be prepared for it. There are so many ICOs, I think 90% of the ICOs are getting delayed because they don't consider these points. And it also can be adjusted over time. That's the beauty. You can leave the smart contract actually open to some changes. So that in the future, for example, I mean, now, for example, we said we are utility, but in the future we could go ahead and say, okay, we want to pay dividends, we are ready to go the security route. We are issuing a prospectus, get BaFin approval, and could have a security in the future. In Switzerland, you're seeing that, for example, utility tokens, until you can use them, are securities. Later, they're utilities.
Yeah, so basically what you can do is you can fork the smart contract, or at least have the smart contract convert into new instruments. And as long as you have the regulatory approval to be able to have that new layer of utility or security added to the new smart contract, you'll be able to redistribute that based on who's currently holding any of those tokens at that time. And you can even do this through a secondary offering if you create a new pool of those assets. Now, I don't necessarily believe in secondary token offerings as a solution long term. It's effectively like a double IPO, and when's the last time we saw secondary public offerings? I think they kind of died out in the 80s, right? Yeah. So I don't think that's a good opportunity, because you're just going to piss off a lot of initial investors in your platform. And that's where I always tell any of our companies, you still need to make sure that there is a real world business behind the token sale that you're pushing, because you need to have future financing rounds in the equity of that company after that ICO. Because you really should not, just in best practices in my view, do a secondary token offering or continue a multiple ICO. You're just going to be diluting the initial investors, and nobody's going to be happy with this. Even yourself, because at the end of the day, anybody that does a token sale, you end up holding traditionally between 5 to maybe 20% of the overall tokens of part of that platform.
Then market acceptance. What does the market need? I think I'm mentioning it now the 20th time, but blockchain application is still crucial at the moment in this niche market. Copyrights, because we talked about intellectual property before, are still very bad received in this market. If you think about the traditionalists, the early Bitcoin investors, they believe in open source. They don't believe in intellectual property. So code is open source, can be used and can be changed. Of course, that changes as soon as corporates come into that space. I mean, with Deutsche Bahn, what I find actually very cool that they are working so much with blockchain. I think they have already Philip Zander just did a study on that. I think 25 patents. 28?
Sorry, 28 developers.
Yeah. Huh? 28 patents.
I thought you were referring to the survey we did on how many blockchain developers they have. That's 28.
Okay.
I'm not sure about the exact number.
But there was also one with patents, right?
Okay,
Yeah.
I'll look that up.
They have the most patents in the German industry space, and surprisingly also a lot in the Ethereum space. I think it was split more or less 50-50 between Hyperledger, which is the private blockchain from IBM, and Ethereum, what is a public blockchain. I find that very interesting, because even the corporates are working a lot with open and public blockchains like Ethereum, and I find that very interesting. But other parts, of course, there is IP, but that's in the private thing or space like Hyperledger. And I think it's, in my opinion, it's totally, it's perfectly fine to have intellectual property actually saved in certain circumstances, but it's really in an ICO not really well perceived. And the decentralization character of your business model is always something the traditionalists are looking for. For example, I mean, the feedback we have gotten, for example, was most of the time very, very positive. But if I'm in Berlin and really talk to the real traditionalists of Bitcoin and decentralization, they say, why the hell are you centralizing due diligence? It should be the crowd doing due diligence. It should be everything should vote on project. Of course, I can very easily then say, and I think 90% of you agree, yeah, but the crowd unfortunately doesn't know enough about due diligence and doesn't have the access to projects to actually perform it. So of course you have to centralize it and then decentralize the investment thesis behind. But this is something really the people are still, especially traditionalists, are still looking for the decentralization character of it.
Who's familiar with the DAO? Does anyone remember this? Yeah, autonomous organization. So basically a few years ago there was a group issued what was called the DAO that collected, I think it was $150 million, and that was going to be distributed to projects that would be a part of the Ethereum community, and it was going to be based on a voting mechanism. Now there's two fallacies behind this. The first is, one, it assumed that people are knowledgeable of the space, and that people are going to be voting in a completely objective and non-sentimental manner. Unfortunately, we know in democracies that this is actually not the case. People are very subjective. People are very irrational when it comes to voting in general. And worst off, people actually do not necessarily participate in voting. You don't have are very easily manipulated. Groupthink is a very powerful and very dangerous thing, that once you have a few promoters within the space that identify ways that they can influence others for ways that they have their own benefit, you now have a voting mechanism that effectively dies, and this is referenced no better than what happens in the United States elections. Basically, you have pools of individuals that nominate just 2 candidates, and now the rest of the country has to elect between just those 2, frankly, very shitty candidates. So it really doesn't work to have a fully democratized unit in this regard, but rather, and the other side of this is that people are just disenfranchised from being able to perform their own research. They don't have the resources, they don't have the experience, they don't have the know-how, which is why a lot of them are even reluctant to take that responsibility on themselves, which outside of the whole forking issue with the DAO, it actually kind of failed, because voter turnout for the DAO was absolutely terrible. Even on EOS, everyone's familiar with Block 1 and EOS, yes? Okay. It's a delegated proof of stake concept. So EOS formally launched its mainnet on June 2nd after raising about $4.5 billion in a public offering. So the mainnet went live, but the only way you can process transactions under delegated proof of stake concept is that 15% of the overall voting power within the EOS ecosystem is done so to nominate the 21 block producers. And these 21 block producers are the ones that authenticate transactions on the EOS mainnet. Now, they're a competition with one another, so theoretically, you're still decentralized, similar to a Bitcoin, except Bitcoin, anybody can process transactions, but in reality, it's 3 mining farms in China. But the problem with the EOS mainnet is that nobody voted. After 2 weeks, only 3% of the overall voting for the block producers actually went through, because nobody gave a shit. Everyone was there because they just wanted to make money on EOS. And this is why voting mechanisms in a purely decentralized faction, especially in the crypto space, doesn't necessarily work. So what EOS has to do, don't tell anybody this, is they went to the exchanges. They went to Kraken, they went to Binance, they went to all these other major players and told them, look, you have to use the voting rights for the coins that are held in your wallet, which are theoretically owned by the distributed members that hold the shares of that exchange, and you need to do these votes, or else we're not going to reach that 15%, and literally, the mainnet dies overnight. So the exchanges actually reach the consensus needed for those block producers to be nominated. So this is actually why we did our mechanism this way, because we had the initial idea, well, we're going to do the Iconiqlab as a DAO. But then when we started diving into this and researching it further, we noticed these exact issues, that people do not engage in a voting manner with these platforms. I mean, I'm sure a lot of people in this room hold shares of publicly listed companies, whether it's through an ETF or whether it's through something else. Has anybody, except for maybe professional investors here, actually enacted their proxy voting? Oh, okay, so you have a handful here. But I mean, there you go. There's your 3%.
Yeah, that's true. So, how do we develop now the ICO? Where do we start?
DAO. DAO. Yes, DAO.
So first of all, build an MVP and an all-star team. So I think we already touched the point that an MVP is absolutely needed in the meantime. You need something that you can prove. The people have to see something, they have to see that you're gaining traction, you're becoming users, ideally already revenues, so paying users, stuff like that. And for that you need some finance. So of course, either you have money yourself, or you have a big team which is willing to work for free, or you find a seed investment fund or a business angel. And then, of course, an all-star team. I think Pat is always the one who says, it doesn't matter, even, or if I look at ourselves, for example, imagine we would have failed with Iconiqlab. I think we are 5 really, really knowledgeable guys, and me. And no, so,
5.5.
yeah. So we have a really, really great team, very, very diverse from 7 different nations actually at the moment. And with very, very different skill sets, with a lot of working experience and everything. And we knew from the beginning, if this would fail, what we didn't think would fail, but we would find something else in the space what we would make successful. And we still believe so. We are still of the opinion that if we would fail with this thing, what I don't think would happen, we would still find our way and would pivot into the right direction. We would react early enough. And that's why, for example, Patrick is always so much focused on the team, because I'm the kind of guy, I really fall in love with ideas, with great things where you have like no competition, where I see the huge potential, where I see the blockchain use case, the decentralization. And then of course I need to feel passion from the team. But then Pat comes in and says, yeah, passion, idea, yeah, it's good, but let's check them out a little bit. And then it comes about the background. Did they execute in the past? Do they have a track record? Let's do background checks with former employees and stuff like that. And I think that's something you should also be prepared. Yeah, passion is good, a great idea is good. You can convince me with that, definitely. But then you have the other Pats also in that space who will definitely also look very, very deep into your backgrounds. And I think that's an important thing to know. So I think the better your track record is, the better your team is, the higher is the chance you will succeed, because people will see that you're someone they can trust and someone who can execute actually a brilliant idea. Maybe a small touch on the advisory board as well.
Oh, yes.
Oh, that could be an hour for itself. Advisory board, yeah, it's really important to have a good advisory board because it really shows the strength of your project. I mean, if you look at our advisory board, for example, we have with Ismail Malik, one of the 100 most influential blockchain people all over the world. We have Philip Zandner, who's a great guy. We have LDJ Capital in it, which is one of the biggest family offices, or head of family offices in the US. And we have a lot of people who are very well known, also in the crypto space, token as a service, Sentiment as strategic partners. But, and now there comes the big but, it's a big part of this advisory thing in the ICO space is a pay for service thing. So if you look, for example, on ICO bench, on the top 20 advisors, you can just reach out to them. They don't care even if your project is good or not, but they will send you a contract. Normally that's something like pay me 30 Ether onboarding fee and then 10 Ether per month and 2% of your tokens as a success fee. And by the way, 15% of the tokens should be an option pool for me where I receive the highest bonus. Those are like the kind of contracts. And projects are doing that because they think they need a great advisory board. I mean, how often have, for example, some Chinese projects asked us to actually be the faces for the company? They would do all the work behind. They would do everything. We just have to be the faces for the company, and then we would receive 10% of the tokens.
Yeah, so basically this happened last year after China shut down all token sales within their boundaries. A lot of the Chinese ICOs, because you can still have a Chinese company that has foreign nationals external to set up an SPV and have that do the ICO on behalf of the Chinese company. So I actually told Max, we're clearly in the wrong business. We should have been doing that because it would have been much more monetizable than what we're currently doing. But it's strange because you start to see stuff like this. And from an advisory board perspective, Max hit the nail on the head. 90% of these world-class ICO advisors in the world deliver no value. And I know this because I know every single one of them. They literally will introduce you to groups that they receive an incentive fee from for providing them services. So for instance, you might have to pay $50,000 to be on CNBC Daily or something like this, and they try to promote this as a massive brand tool for you. It's ridiculous. And what they do not deliver is any connection to real world investors. This is pretty much what all of these major ICO advisors are doing. They're going to come to you and say, well, you know what, we would love to have you as a part of this publication that we do, and we distribute all of your materials. But what they don't tell you is that that media house is just something that they own on the side that you're going to have to pay in addition to having paid this advisor up front. And they're just going to distribute it to a very limited network of individuals. It's kind of this ICO bench mafia.
Yeah.
It's effectively what it works out. And they've created this whole ecosystem around themselves that they are the ICO advisors that are worth working with. Yeah. Now, I tell everybody, only work with advisors that are actually willing to invest in you. If you approach an advisor that wants to work with you, he should be willing to put money into your token, into your company, and really dedicate real world time to working with you and developing your ecosystem. If somebody's not offering you money, then they're just looking to promote themselves or just monetize themselves based on what you're doing.
And that's why it's, for example, and it's much more important, I don't know, if you, let's say, I know you have a blockchain solution in the healthcare space, then it's much, much better to have as an advisor the Minister of Health from India, for example, than the top one ICO advisor. Yeah, but this is slightly also changing in the perception. So a very good team, a great advisory board, but don't go with the ICO bench standard contracts expensive ICO advisors. It's not a good idea. So generate content and documentation. So in the very beginning, you will probably start working on your white paper. You will create a pitch deck and a color and a one-pager. I think that should be all in place. Nothing new. That's the same in the startup space, because you slowly have to get the message out there. You slowly have to convince people of the idea you are having. You receive feedback. You can even do A/B testing with your website to actually track your bounce rate, conversion, and stuff like that. And then you can slowly really start to professionalize it by building an MVP, working towards an MVP. You should open up all your social media channels. You should be definitely in the crypto space, not only like on Facebook, Twitter, and all of that, but you need Telegram, you need Reddit, you need Bitcoin Talk, and so on. You need Steemit. And that are all different channels that have to be set up before, because if you start them too late, it is too late. And then it's really important in that space to engage the community, because Telegram, for example, if you look on this ICOs groups, it's steadily news, steadily discussions, and a lot of scammers, of course. But normally there are discussions. You have to be very engaging. You have to share basically everything you're doing, because the crowd is used to that and they are demanding it in the meantime. And then do an airdrop, do a bounty campaign. A bounty campaign, yeah?
Are you advising on that as well?
Yes.
So hands-on PR and communications, or is it just another generic?
Yeah. Yeah, I didn't want to pitch us today, but so in a lot of things, we are doing the services directly. Like, for example, telling you what channels to use and what time to do your airdrop, how to structure your bounty and stuff like that. But we would never be the people who would structure your Google ad campaign, for example. We would never do that. We could tell you our opinion on Google ad campaigns and what words might work, or good service provider in performance marketing, but we ourselves would never do that. Same example.
Content is on us, but more the channels, and the advice on the channels is on you.
Exactly.
Also, we're not.
It's the same. It's the
we're
same.
not service providers.
It's the same. In some cases we are, but it's the same. For example, with lawyers or with coders. Yeah, we would not be the persons who are coding your smart contract, but we know very knowledgeable people that would do very comparably cheap for you. We know the lawyers in the different jurisdictions that would be the best fit for your kind of token model to push it forward. With the difference that we don't have this incentive like a lawyer normally has. If you go to a lawyer, he will probably tell you, yeah, the more hours he can do, the better. And he would always say, of course, in my jurisdiction. Yeah. And we have a different approach to that. We can tell you this is the right jurisdiction. They are not ripping you off. Yeah. 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 You're welcome. Yeah. A bounty is. No, I guess not. I guess not everyone is familiar with the terms bounty campaign and airdrop. No, right? Okay. So it's actually some kind of marketing. It's for example, I tell people in a bounty campaign, if you write a blog post about my company, and you can prove that it reached 1,000 people and it had 10 likes, then you will receive 500 of my tokens. Or if you join and then very, very easy tasks in this bounty campaign are, for example, only just join my Telegram channel. Just like my Facebook site. That are the very easy ones. And actually those are called airdrops. Airdrops because, you're just having a wallet, and by doing a very simple task, you will just receive 1 token for free. And this is like for community building and for marketing. Actually, the crowd starts to market you as a project. This is what happens there. And actually funny, just a small story about that, because that might be interesting for some of you in the future. Like even 1 year back, that was all called bounty campaign. The easy task, the difficult task, doesn't matter. All was a bounty campaign. Then out of the sudden there were airdrops, which was basically the same. So we thought, okay, why should we call it airdrop? It's still the same thing. Yeah, you're joining Telegram, you receive 1 token. That's it. But we were wondering, okay, not so many people are joining Telegram and liking. We just said, could it really be just a word? And then we said, okay, the easy task, we now call them airdrops, like other projects. And then bum, 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 bum. So it's really, the naming really is a very crucial thing here. Yeah. Oh yeah, legal issues, tech issues. I mean, there are some points we already touched a little bit before because we were talking about legal considerations. We were talking about smart contract auditing, for example. But it's really, really important after you figured all of that out, you created your first content, you maybe already developed your prototype, you already know how to integrate the blockchain within your business. You know how your token looks like, how do I structure the SPV, so the special purpose vehicle that will be fundraising for you. Security versus utility token, again, of course. Then where, actually that's something Pat already mentioned before, it does not matter where you launch the ICO from, it does matter where you solicit investment to. And that actually determines a lot of things. For example, you can't do a US retail sale, more or less today. There are very, very, very few exemptions where you might be allowed to do that, but you can't do that nowadays. China, you can't sell to. South Korea, until the summer, I would rather also not do it. It's quite still quite unclear, but this will maybe change. And then, of course, accredited investors. It's a huge topic. So I think one thing which I didn't really say today is you have to consider, I think, two very important numbers. First of all, most of the money in the meantime raised via ICOs is not raised from retail investors, it's raised from accredited investors, from big investors. So this is something you definitely want to deep dive into and you want to have a look at, because that's really important. And there are ways to do that even in the US, as we mentioned before, via PPM and the SAFT agreement, you can raise money from accredited investors in the US. A second very interesting number is after China banned the ICOs, since then the most money into ICOs come from the US. Most fundraising comes from the US. So don't underestimate it. Don't say from the beginning, oh no, we can't do a retail sale there, we only want to engage the crowd, we are not going there. Take that into consideration. And the crowd actually should just be, or will probably just buy into the last part of your tokens. Of course, it also depends on your business. If you're purely B2C and all of your token holders will be your users in the future, try to make as much marketing towards retail investors as possible. If you have a B2B business or the token is not necessary for performing tasks on the platform, then of course go with institutional investors. Why not? They might be even strategic partners holding a stake in your token. That might be very useful. The tech issues, also choosing the right blockchain. I think that's something we didn't talk at all about today. Ethereum has been out there since a while. It's functioning, it's working, it has shown that it works. But compared to other chains that are coming up like Cardano, NEM or EOS, it's still quite slow, quite expensive, and limited in the transactions per second it can perform. This is now not interesting if you do, I don't know, let's say you're in a supply chain business and you have always huge transactions and they occur maybe 10 times a day. Then this might be not too interesting. But imagine you're doing ticketing. Ticketing for football matching, for huge concerts. Then first of all, sometimes that could be amounts of €1 or €2 in the ticketing space. Then it's a lot of transactions. Often they get traded afterwards on the secondary market. So there you need a very well-performing blockchain. You need a blockchain which can do thousands of transactions per second, which is very, very cheap in its transaction costs and is scalable. And that's, for example, at the moment, actually EOS. So a lot of startups are reaching out to us. They are building their prototype normally on Ethereum. And often, if this is the case, if they actually need a very scalable solution, we suggest them to go to EOS or Cardano as soon as possible. Another very important point is, of course, the wallet infrastructure. So how do we make sure internally that actually our money that we are raising from the investors which are trusting in us to make it safe? One way to do that is a multi-sig wallet. So for example, every money or every ether we are sending to someone has to be confirmed by several private keys within our company. So it doesn't matter, you can hack Pat, you can hack me, you can hack 3 other people, it doesn't matter. You would never be able to access our wallet. So a multi-sig wallet, I think, as an internal infrastructure for really sending money to your partners and to protect the money from your investors is absolutely needed. It's 10,000 times more safe than a bank account. Multi-sig wallet, that stands for multi-signature wallet. And for example, Gnosis is one of the providers there. Yeah.
Basically how it works is this.
Gnosis.
The basic underlying cryptographic language of the blockchain matches a public key and a private key. The public key is what everybody sees, that wallet, that basically just think of it as, but basically your wallet, that can distribute money and accept money, Bitcoin, whatever, on your behalf. Behind that is a private key, and that's your login information. And everyone protects this with their dear life. Because the connection between the private and the public key is the only way you're able to access that wallet and allow for any transactions to occur. Now with a multi-signature wallet, you have the singular public identification. So anybody on the Ethereum, anybody on the EOS mainnet can see what key that is. And if your personal identity is attached to it, it can be. Traditionally they're just anonymous anyway. But a multi-signature wallet has multiple private keys. But only if a consensus of those multiple private keys is reached to authorize the transaction can anything occur. So for instance, at Iconiq, we have one of our multi-signature wallets, this is the one we use for the ICO. Every penny in Ethereum that was given to Iconiqlab at our ICO can be seen on the wallet. Everybody a part of Iconiq knows what the public address is in our community, and they can see where the money is being stored. Max, myself, and Luke are the only people that have private keys to this wallet to access it. And you have to have 2 out of the 3 of us signify that this is a valid transaction and allow it to occur on chain. So it allows for, theoretically there can still be some sort of collusion on the back end, of course, but it allows for a much higher security level because I would have to be hacked simultaneously as Max or Luke to grab those private keys to be able to move any Ethereum out of the wallet.
But also causes delay in transaction.
Hence the scalability issue of the blockchain. It does absolutely cause a delay in transactions. So this we do for our storage accounts, but we also do have other signature wallets that, for instance, our marketing director, Aravda, she does a lot of payments just on a daily basis for some of our vendors that we provide, or that we use, that provide services to us from a marketing perspective. She has her own wallet, part of the Iconiq network, that she has authorization of. And based on the budget that our marketing director is allowed to work with, we provide to her on a monthly basis X amount of Ether that she then uses out of her own wallet that's owned by Iconiq to then distribute to our vendors. So that actually speeds up the transaction process and delegates more of that responsibility to Aravda. And it's actually a very good budget tool because now on a monthly basis, we only give her that amount of money rather than, for instance, a company credit card that she can have access to.
So it doesn't need to be simultaneously 2 private keys.
No. So with Aravda's wallet,
Different layers.
yeah. So with Aravda's wallet, it's basically you can think of it as a parent-subsidiary relationship. We have a parent wallet; it's a multi-signature wallet. We have to have multiple people that authorize those transactions. Underneath, there are different accounts that one individual has ownership of. On a monthly basis, we'll allocate money down to those wallets, allow those individuals to have a delegation on the transaction authority for those, and based on the vendors that they're engaged with by our corporate bylaws, they can pay out. But they own that private key. So for instance, I don't know Max's private key because it's actually his private wallet. Just like my wallet is actually my private wallet where I have my Bitcoin, I have my Ethereum that is currently stored. I would never give that to him because then he can just go in and steal all my Bitcoin. There's not much, but he can steal it if he wants to.
Yeah. I think that's also something very interesting, especially if you have for example, a crypto fund, and this might be of interest to some of you in the audience. Then of course it's also very, very interesting, how do I do the storage actually of the coins? Yeah, cold storage, hot storage. Yeah, but that's
Probably explain those. Cold and hot storage.
Yeah, cold storage is I store it on a physical device. For example, I store it on a device which is like locked in a safe in a bank account in Switzerland where no one can access it. Hot storage would be just a wallet infrastructure, basically. Yeah. So,
Cold wallet and hot wallet.
yeah.
So
Yep.
a hot wallet is linked to the net. Warm wallet is pseudo. Cold wallet is basically just a USB device.
Yeah.
I mean, it's actually not, but effectively.
Yeah.
Like one question about these multi-signature wallets. Also, like in your case, these like 3 people have access, but at least 2 or 3 need to give their permission to do
Yes.
something. Do you have any like strategy of recovery if one of you might get hurt or whatever? Like, is not
Yeah.
able to.
We have the good thing is that
That's
one of our co-founders is absolutely paranoid. And that's a good thing there. Yeah, we are very, very safe. I don't want to tell all the details, but yeah, we are working with very.
What happens if 2 of you go on a plane crashes?
That wouldn't matter in this case. We are prepared for everything. It's not like the Coca-Cola reset.
So there are ways you protect your private keys.
Yes.
One of them, so if it's a cold wallet storage, I mean, you go lock it in a bank account, it's a safe deposit box, you have to trust that they're a good custodian. The other side of this is what a lot of people do. To access your wallet, if it's a hot wallet, for instance, if it's a cold wallet, there really isn't an issue, because say, for instance, Max dies, company bylaws, the passage of that cold wallet goes to the company, we can plug it in. And as long as you actually have the physical device, it doesn't matter what you know the private key or not, the private key is linked to that device. From a hot wallet perspective, there's words. Basically, every hot wallet will give you 12 words in a completely random order, and you don't have any idea what the hell those words are. It's that individual's responsibility to write it down. And that is as valuable as the private key itself, because it effectively allows you to recover that private key. Now, for instance, I have that, and it's locked in a safe in my house. So if something, God forbid, were to happen to me, I died tomorrow, and let's say, so Luke's and Mac would be able to enact the transactions, but let's say, God forbid, something happened to Luke. So Max would be kind of up here without a paddle, because he wouldn't be able to access any of the money in the account, theoretically it'd be gone. But he would be able to get that piece of paper locked in my safe. The company has the ownership of it. That would allow him to have the password to recover my private key to then enact those new transactions. And this is how you secure your private wallets. Now it's crazy because a lot of people take a whole bunch of different approaches to this. So a lot of Bitcoin whales, if you want to call them this, they carry around suitcases that are handcuffed to their bodies that literally have the cold storage device in them, and they won't put it anywhere. They have massive security around themselves. But for instance, I was out in Los Angeles a few months ago, and there was one guy, he was at the casino, got a little bit drunk, started talking about all the Bitcoin they made, and he was dumb enough to just keep his cold storage on him at all times because he felt that was the safest place. Well, yeah, guess where his wallet ended up? Somebody stole it, and $2 million in Bitcoin pretty much just out the window overnight. He strangely didn't seem too upset about that. I don't understand that one. But a lot of people now lock them in Swiss vaults. So what the Swiss have figured out is there's a lot of branding around locking something in a Swiss mountain. So basically, there's a lot of cold storage solutions in Switzerland. They say it's locked in a mountain. It's effectively like Iron Mountain in the United States for all security documents. That's where State Street and Bank of New York Mellon, they all have their custody solutions. It's become successful. The problem is it's an absolute pain to get that device and replug it back into the mainnet. It's absolutely terrible.
So just to, sorry, maybe I didn't know as much as the others.
Yeah, sure. Yeah, you got one. Okay.
So the cold wallet, how does it connect with a warm wallet?
So you can, a warm wallet solution is really just a hybrid. So for instance, with the index funds that we're launching, we're doing a warm wallet solution where the tokens that we know are going to be actively traded are stored in a multi-signature layer, and that's connected to a cold wallet, which we know will be the tokens that are not traded. So based on our algorithmic trading rebalancing that we do on a monthly basis for the index to capture the full market capitalization of the crypto space, we're, for instance, doing the top 20 in the first index fund we're launching. Portions of that, large amounts of Bitcoin that we know aren't going to be traded in the upcoming rebalancing or the upcoming reconstitution are held in a cold storage wallet, and they're left in Switzerland. Nobody touches them except for the custodian. But the warm wallet solution is going to be held simultaneously by the the members of the investment committee. So those that authorize those transactions on that monthly basis, saying this is the rebalancing that we're going to be doing based off of what our algorithms say, they simultaneously will turn all three keys, which is the digital metaphorical signature that they'll have to authorize those transactions to take place.
The cold wallet actually only store those coins that are not going to be traded.
Exactly,
It's
because
like
the cold wallet you would have to take out of storage, plug it into your computer, put those tokens on an exchange, and then trade with them.
Okay. It's like
So that's
it's like a long-term.
exactly. And the reason you do this is because at the end of the day, theoretically, wallets can still get hacked, right? It's on the internet, right? So even though we like to say that blockchain is as secure and as safe as possible, the truth of it is that there is going to be a time where there are going to be blockchains that can be hacked. Now, the odds of this happening are astronomically low, and the reason it's not happening is because nobody is economically incentivized to do this. So for instance, if you wanted to hack the Bitcoin mainnet, the odds of matching public and private keys in the blockchain hashes themselves, it's something like you have a better opportunity to reach all the stars in the ecosystem, in the world, than you would be to hack the Bitcoin mainnet. But each hacking attempt would have to be paid in a transaction fee. And because the transaction fees are so high on the Bitcoin mainnet, you would never be able, or you're not financially incentivized to hack it, period. There is enough money in the world to be able to do this, and you're never going to find it. I think the algorithmic opportunity that you would have to actually hack it, it would run for thousands of years, I think, before anything happens. But that doesn't mean that it still can't be hacked, which is why regulators are still skeptical of these hot wallet solutions, because theoretically, wallets can get lost. One of the biggest issues that we had recently was parity. So Parity, for a while, was a competitor of Gnosis. They were a multi-signature platform. It was an open source network where coders could go on and update different layers of the code or play around with it to create what could theoretically be a more secure wallet. What happened is a very novice person went onto the mainnet, started playing around with the code. He was just familiarizing himself with it, deleted one line that everybody thought was superfluous. Well, what happened is $40 million went out the door because it crashed one of the wallets. And basically that amount wasn't able to be recovered.
I think what he actually did is he deleted a library, which
yeah.
smart contract used, and if the library is gone,
And it was a complete accident, just somebody that really didn't know what they were doing, just really trying to learn the code, and basically millions just overnight were gone. And the unfortunate side of this is that was money that was raised in ICOs. So this is why regulators are still skeptical of the hot and warm wallet solution, which is why we're actually conversing with our regulators on a daily basis around why this is a worthwhile opportunity and the best solution for the space. So I guess I'm running from here then. Sorry, you guys have to listen to me talk some more. So the next aspect is capture the first adopters in a pre-sale. You want to have a branding and a signaling effect to generate hype behind your platform. Now, you don't want to do hype for the sake of hype when you're doing an ICO, simply because that's one of the biggest plagues right now in the entire crypto space, generating that FOMO, they call it, fear of missing out. But you still want to signify that you had worthwhile investors or you had a community backing your project as you go towards an ICO. And this is one of the reasons why it's so important to showcase that you're able to capture Telegram members in your chat, because that's effectively just a KPI. It's why you have to showcase private investors that have become a part of your platform, and be transparent about the bonuses and discount that those large ticket investors have received, because what you also don't want to do is show to a community that I had this one phenomenal investor come on board, but he got to buy the tokens at 10% the price that you did, because the community is going to ask why, because they think he's just going to dump those tokens in the future. So you want to create that signaling effect, but you have to do it in a very, very smart manner, and it's best to do it through private individuals that are a part of your community, as well as the community itself. And you can take this to the remaining marketplace through an ad campaign to showcase that community backing. And then last but not least, you launch the public, sure.
About the ad campaign, lots of platforms are not allowed to do
Yes. Well, so yes, but that doesn't mean you still can't advertise the business.
So Iconiqlab itself, we have a massive marketing campaign because we want to attract the best quality startups in the world to our platform. So we still do a lot of advertising on Google, on Facebook, on LinkedIn, on Steemit, on Medium, all these different channels about the company itself, not necessarily about the ICNQ token sale. Now, we're actually allowed to advertise ICNQ on Google, one of the only few companies that's still able to do so if we wanted, because we got regulatory approval. Google can be assured that we are not soliciting for an illegal security offering. We're soliciting a true utility token, so Google will allow us to work with that. So there are options that you can work around with this, but the best is focus on the business, focus on the team, focus on content. And in this space, content is absolutely king. You have to be putting out blog articles. You have to be showcasing yourself as a thought leader. Because at the end of the day, and we've tried to run regressions on this and identify what is the best way to do an ICO, or what are the key signifiers of what would make a successful token sale. It really doesn't have much to do with the market. It really doesn't have much to do with the team. It really doesn't have much to do with it being a protocol, with it being a utility token, with it being a DApp, with it being a security. There's not much that you can relatively statistically identify as a success factor for an ICO today. But the one thing that stands out is the individuals that are leading the company, and not from a competency standpoint as if you would look at a team perspective to make sure they check the boxes of something that will be worthwhile, but rather a charismatic perspective. So one of our investors, Christian Angemeyer, he's very critical of the ICO space in this regard, because he basically looks at the leaders of token sales as cult leaders. And while there's a negative connotation to the word cult in just the traditional world, he really kind of hits the nail on the head with this, because they effectively are cult leaders. They're individuals that are able to inspire, to invigorate, to excite people to come to their platform, and that's what generates this hype. And that correlates very, very well to the success of an ICO, which is why you see with most successful sales these very charismatic individuals. And there's no better signifier of this than the evolution of Vitalik himself. Vitalik is started as a very shy, very behind closed door individual. He was a coder, and now he's become this public personality because he's been forced to do this, where now he's seen as one of the thought leaders in the space. EOS, Block One's CEO, Brendan Bloomer, Block One being the publisher of EOS, probably one of the most insightful and invigorating individuals you'll ever have the pleasure of meeting, because he has probably some of the best stage presence you could ever imagine in the space. One of the most articulate individuals that are able to be seen as that thought leader, which is very, very important for the success of a sale. If that answers your question. Yeah. So the next stage is you launch the public sale. Typically what companies will do is use the financing that they raised in that pre-sale to do a massive public sale marketing campaign. We personally kind of frown on this, although it is currently the practice. It's basically me coming to you saying, please invest in my company because I'm going to use all the money you're giving me to turn around and find new investors. It's a bit superfluous of a practice, but it is what is now today best practice in the space, because you have to generate that hype and that FOMO behind the projects. And basically what you're seeing happen is it's not just about the token sale itself that you need to be concerned with, but aftermarket, secondary market marketing is very important, because everybody wants to see these listed on exchanges, and for those exchanges, once the tokens become liquid, to prove that there is a valuable use case for the token through the transacting on the marketplace. So you really need to make sure that you're continually engaging with your community rather than going dark after the ICO, and you want to make sure that you get that exchange listed successfully completed, and that you're still continuing to push the marketing so the value of that token can still continue to appreciate rather than dying in the Ether Delta graveyard. Now, when you're doing an ICO, of course, best practice, do a white paper. All the jurisdictions are coming out with a framework as to what needs to be included in a white paper, very similar to what needs to be included in a prospectus, but you still need a pitch document. Because at the end of the day, you're doing nothing more but pitching to investors, and I can promise you this, nobody reads the white paper. Very, very limited people actually will read the white paper, which is a shame, because I spent probably, I think I locked myself in a room for 48 hours writing ours. Literally just locked myself in a room, didn't talk to Max, didn't do anything. We were living together in Berlin at the time, launching the company, and he didn't see me for an entire weekend. And it's unfortunate, because I'm pretty sure that 3 people have read the damn thing. But everybody reads the pitch deck. Now, we call them a color paper to be colorful in the space. Now, the pitch deck should include everything that you traditionally will see from an investor pitch. It needs to include a problem in the market space. It needs to include the solution, and then it needs to include why you as that team are the only people in the world that will be able to execute and deliver that solution. The exact same thing that you'll see in every traditional venture pitch. And we push all of our companies to do this with the added information to the token sale itself. So covering the token economics, covering the background this team has in blockchain, cryptocurrencies, et cetera, and what the use case for the utility is. Oh, you don't have to take a picture. We'll be emailing this to everybody. I think Philip Sodner has all the emails. Yeah, we'll make sure everyone has this so you don't have to worry about taking a picture of the slide. Because at the end of the day, you're going to be meeting a lot of private investors. One of the biggest fallacies of the entire crypto space is that it's easier to do an ICO than it is to raise from a venture round. That might have been the case in 2017. Today, I promise you it's not. You have to have real worthwhile partners that know who are worth talking to. And even then, you're going to be going and having meetings with 50 private individuals, ultra H&Ws, family offices, accredited investors, funds, and doing the exact same pitch that every single startup is doing to multiple VCs. And you're probably going to be lucky if you convert 2 or 3 of them to your token sale. Not everybody's going to be convinced by your business. Not everybody's going to be convinced by your use case. Not everyone's going to be convinced by your team, which is why you need to have as many of those conversations with these private investors as possible. And because VCs don't like wasting their time, family offices don't like wasting their time, you need a very simplistic document like this, because they're not going to read the white paper. They're going to go through this, and only after it sounds interesting, they're going to go through their full due diligence and go through the investment documents. Well, I'm guessing since that's not moving anywhere, that's the last of it.
Yes.
Oh, fantastic. So I guess at this point, perhaps we'll just open the floor to any questions anybody has. Hopefully, we were able to impart some information to the rest of you, and I really appreciate the time that you gave us today. Thank you so much.